Week 176, real estate raccoons are at it. Welcome to the Raccoon Den. This is the boardroom. You've never seen the boardroom. Here it is. That's the rest of the office back there. Anyway, so today we are going to talk about what everybody's talking about, but we're going to talk about it in a different way. Inflation numbers came out this morning, and it got a lot of real estate agents excited. Look, it's 2.8%. That's not really the full story. Look, inflation coming down off of last month's 3.3 is good. However, 2.8% is what you call a headline rate, a posted rate, or whatever the actual term is, something like that. But when you look at core inflation at 3.52%, still lower than it was, in fact, 40% or 35% lower than it was last year and 11% lower than it was the month prior. So all of those are good things, but there's a big difference between 2.8% inflation and 3.52% inflation. Both of them are trending downward. That is a fantastic thing. However, to get to that target rate of 2% where, the Bank of Canada can finally be like, okay, we're done raising rates, we're done absolutely destroying your finances now. But hey, at least we got the economy under control. Before that happens, we got to see a more realistic drop in the core inflation number. And, long story short, the difference between the headline inflation number and the core inflation number the core is more stable because it's removing two of the more volatile components of the consumer price index. It removes food and energy costs, which are generally fairly volatile, which result in big swings in what that inflation number might be. So, again, both of them are trending down, which is a phenomenal thing, but we're not as close to that rate halting environment that we hoped for. So what does that mean? Also, hi, I'm Ara Memorian, by the way, in case you don't know. I own the spring team here in Toronto. But what does that mean? That means on the surface, there's probably going to be some more positive news out there right now. Not because people are misunderstanding what it means, but because the general positivity is in the downward trend of inflation, core inflation, and the headline inflation. That's all a good thing. So some buyers are going to be more comfortable getting into the market than they were before. That's good. But what it does not change, and if you hear anybody really saying stuff like, oh, this means that rates are not going to go up anymore, that is untrue. The Bank of Canada is for sure going to be patting themselves on the back for this because they haven't seen a 2 in front of that inflation number in a long time. So they're going to be like, yay, our stuff is working. However, most banks are still pricing in, or banks or whoever they're still pricing in a 50% chance of rates going up at the July meeting. What's the number? I think it's a 20% chance of rates going up again at the September meeting. So listen, I'll take 20% over 50% all day long. However, there is still uncertainty, and that's what it's really all about. Remember, we've talked about this over and over and over again. Uncertainty creates paralysis, and until a buyer or seller or whoever is transacting is certain about the potential outcome, then they will likely not make any big moves. Some people will, but the majority won't. And in order for a market to swing one way or another, you need the majority to kind of be in line with one way or the other. So that kind of brings me to my next point. So let's look at sales now, and let's look at sales last year. Relatively similar environments, but huge change and one big difference. So how last June or last July and this July are similar is that we have an uncertain rate environment. At that time, last year, we had uncertainty with whether the rates are going to keep going up or not. It was fairly clear that they were, but people were still buying. Prices were just thinking about coming down at that time. The bigger sales kind of happened in June and fizzled out in July. And as we headed into August, September, etc., we know what happened as everything kind of bottomed out in the winter before Christmas. Now we have an uncertain rate environment. We have the summertime. Sorry, I forgot to mention the typical summertime lull that comes around this time of year anyway. And lull doesn't mean there aren't competitive offer situations, because that happens all over the place. Our clients have been getting their butts handed to them left, right, and center, because what they're looking for are still very active, which are giant end user, family friendly houses in tight communities like Roncy, High Park, North Riverdale. like those areas, forget about deals in any of those areas. Like they're still very, very active. But what I wanted to really point out are like last year, there were, if you look at the sales numbers below, you'll notice that last year's sales numbers are in line with this year's sales numbers. So there aren't fewer sales today than there were last time at this point. Now, the one thing I'd like to do, and I probably should have done before this, is look at the year prior when it was super active, and I'll do that and I'll post it in the article once it goes out. But generally, right now, things are moving along as they should be. Some properties are selling fast, some properties are not, and sometimes there doesn't seem to be a real reason as to why certain properties are moving faster than others, but the common denominator amongst all the fast movers are all neighborhood, location, and school related. Homes that are in tight, amazing public school districts are flying, and they always have, and they always will. That's why you've got the North Riverdale community with like Jackman and Withrow and all these amazing schools up to a certain point. Like you get to like the 200 block of Withrow in North Riverdale, you go past like the number 240 or something like that, 240 I think it is, you're in the Blake school zone, which people don't love as much as the Withrow school zone. So like that's why a house on the same street, one could be sitting for months and the other one could sell with 10 offers in a day. It's all about the school zone. So not all homes are treated differently, or they're all created equally, but treated very differently. Depending on what's going on there. So that's really if you're a buyer right now, though, I really, want to emphasize the fact, and we talked about this at our team meeting last week, is that, all of this, data and all of this data we're exposed to, all of these, like, you've got creators on TikTok and Twitter and all the other socials, telling you to do one thing or telling you to do the other, or talking about this alarmist thing or that alarmist thing, or like this person's shitting on that person or that person's shitting on that person. Like there are a couple of, general typical offenders there who I don't think anybody really takes all that seriously anymore anyway. Like these people are just in their weird little negative echo chambers of abuse and self-hate. But there's a lot of information out there right now, and it's paralyzing a lot of people from making really strong lifestyle decisions. Like, I don't really care if you feel comfortable buying or not. Like, my job isn't to make you buy anything. My job is to help you do what you said you wanted to do. And in this case, could be, you wanted to move your family into a better school zone, or you wanted to live closer to downtown so you could, have more fun on weekends with your friends because you'd be closer. Like, these are lifestyle decisions. Nobody loves to move. Nobody's doing it because it's an investment, although some people are. And we're not talking about investment properties and stuff like that. But I really was reminded when I was scrolling through Facebook last week, and I brought this up at our team meeting, and I think it really is the message that I want to focus on quite a bit, because we work with investors who are really focused on these numbers, but we also work with a lot of families and people that are just making big lifestyle decisions. And I don't want to use that, the biggest asset of your life kind of thing, because honestly, it's kind of insulting. What if you're buying bigger shit? I don't know. Anyway, I just really feel like it's important to focus on the lifestyle reasons why you're deciding or considering making a move, and understanding that, if you make a purchase today, there could be some sort of economic trigger that affects the value of that property tomorrow. But long term, you're probably not going to sell this place you're buying over the next year or so. Most people have a 3 to 5 year window before they're considering a sale. So, during that time, a lot can change. And as we've seen, economies move a lot faster these days. So things are very, very much different. So anyway, the long and short of it all is it's really important to focus on these numbers, but also not get all caught up in the whole day trading mentality of everything. But it's also really, really important to keep those lifestyle decisions, the reasons why you decided to make this purchase in the first place, top of mind. And understand that there are a million reasons why something could be a good or bad purchase, but overall, there's nobody that can tell you that you bought badly or you made a smart buy until after the result. And that's really not how people make, strong decisions these days. So, or at any time, not just these days. So anyway, so the rest of the information is just down in the blog. I've got full detailed stats down there for all the 5 communities that we've been following. And that is all for this week. So we'll see you in week 177 next week. Thanks so much. Have an awesome day.